Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is a daily analytical report. So let me deal with the market right now. First we start with the fundamental analysis with the calendar. What we had so far is GDP from China, which came slightly worse than expectations, industrial production as well, but retail sales came better. Average earnings in UK came in line with expectations. Well, here you can see slightly, including bonus, came slightly worse than expectations. Still to come, we do have a bit of Fed speak. So Fed members will show their outlook on the global economy, monetary policy, etc. Real fireworks should start on Wednesday, because on Wednesday we do have CPI from UK, CPI from Eurozone, and interest rate decision from Bank of Canada, along with the statement. And we will continue with the Fed talk. For example, William Dudley will speak about monetary policy. On Thursday, we do have retail sales from the UK. And on Friday we do have retail sales and CPI from Canada. So definitely, and we continue with the Fed talk, with the Fed speak. So we do have important events, especially for Canadian dollar this week, but also for the American dollar as always, because of the Fed members speaking. Important event is IMF meeting over the weekend, where some of the smartest guys in the market will talk about the global economy, and they will try to assess if we are getting closer to the recession, because there are some voices that the global economy is heading towards the recession. We don't see any serious signs of that. But you never know until it happens. And the period of the growth that we had so far, there are some questions about the sustainability of this growth. If maybe it won't be the biggest recession in the world, but a bit of a slowdown. And those guys on IMF meeting will try to estimate the forecast for the global growth in the nearest future. So these are the markets. This is the calendar. Other than that, from the fundamental point of view, we are still digesting the situation in Syria, where we had the response after this. Well, I don't want to say that after the chemical attack, because we don't have proofs of that so far. And to be honest with you, that's a very strange situation. If you look from the distance, how is that even possible? And especially that Donald Trump said a few weeks ago, that America is withdrawing troops from Syria, and after this attack supposed to happen, well, I don't want to go into details in this political thing, because we came here to focus on the markets, not on the political issues. So the thing is that this answer of the United States was perceived as very good by the markets, because we do not have escalation of the conflict, and Donald Trump was not so weak as Barack Obama when he drew this famous red line, which Assad should not cross, and he did, and there was no response from US. And he was criticized for that by Donald Trump. So Donald Trump had to do something, but luckily we did not get any start of a bigger war. But maybe still to come. We'll see. Hopefully not, obviously. So this decision was perceived as a very good sign for the market. So now stocks are heading higher. We had, if you're trading on American stocks or American indexes, you should look deeper into the situation there. Obviously, FANG stories are important. FANG is Facebook, Amazon, Netflix, and Google. And two biggest stories are with Netflix, which showed the results, and the results were very good. We were close to the all-time highs. It's a bit of a struggle to beat those highs, but the sentiment towards Netflix is definitely positive. And about Facebook, we all know what happened. Still, we have some problems with Facebook. At the end of March, we had a huge correction on Facebook, but the beginning of April and the first half of April brings us the reversal. Because traders need to remember that Facebook is not only Facebook, it's also Instagram, WhatsApp. So even if the Facebook has problems, those two platforms are doing very good. And traders are optimistic about the whole Facebook group, right? Even though many people canceled, deleted their accounts on Facebook, investors and traders do not see that as a negative factor because Facebook is climbing back higher. And that's pretty much it in case of the stocks, in case of the shares. Friday and Monday brought us reversals on the market. That's usually what is happening after strong directional movements that we saw in the first during the whole week, like from Monday till Thursday. On many instruments we do have interesting trading occasions, so let me show you those. We start with the Euro CAD, which is still making significant lower lows and lower highs, so the sentiment is negative. But the drop stopped at some point. We lost momentum. In the longer term, this is just a correction of the long-term uptrend. So the long-term sentiment is positive. Oh, I had a short position here, which was closed already on profit. I closed this here. I would love to see the price testing the long-term support, but in the same time, we need to remember that it's a long-term uptrend. And this formation that we have here is a flag, is a long-term flag. Flag is a trend continuation pattern. So a breakout of the upper line of this formation is more probable, and the breakout of the upper line of this formation should trigger us a legitimate buy signal on this instrument. Next one is Australian dollar to Japanese yen. This one I'm telling you. I was saying that there is we do have a correction on some of the instruments, and that instrument is Japanese yen. On almost all of the pairs, we do have a correction here, not on the British pound to Japanese yen because it's driven by a very strong pound, but Japanese yen for the past 3 days is stronger. So what we do have here is a bounce from 38.2 and a breakout of the uptrend line, which can be a signal to go short. If you plan to buy Japanese yen, it looks alright, it looks decent, but I do have better setups for you. So this is just a confirmation. This is one of the trades where you can see that Japanese yen is stronger, but let me show you the rest. a bit later, not now. New Zealand dollar to American dollar is also having a kind of a reversal. It looks here like a head and shoulder pattern. You think that on hourly chart it could look better, but it does not. It's not a beautiful head and shoulder pattern. The left shoulder is not clean, like this is a left shoulder and a head and a right shoulder. It does not look good. And by that mean that it does not look very technical. So I would be very, very cautious with opening short position here, because although we do have a small reversal, this is not a sell signal yet. So the sentiment is positive and will remain positive as long as we stay above this blue, navy blue area. That can be a strong support. British pound to American dollar. I was telling you that British pound is strong. Well, daily chart, daily candle so far is a shooting star on a important resistance, so maybe it does not look strong, but it was strong here when maybe on hourly chart. It was strong here 2 hours ago at the beginning of European session. It was looking alright because the price was breaking the horizontal resistance, but now it really looks like a reversal. So we do have a long-term horizontal resistance from January 2018, and the price makes an attempt to break it and creates a shooting star. A shooting star is a trend reversal pattern which can create a drop here. Especially H4 candle is very negative. So, well, this is an interesting occasion because in terms of the risk to reward ratio, I'm switching between those time frames to show you the best one on a daily chart. Let's say on a daily chart. Here is a long-term trend line. So selling now, stop loss around 60 pips and take profit around 200 pips, which makes it a desirable risk to reward ratio. So this trade looks very promising. Obviously, if you a quick lesson from the price action, if you're trading based on daily charts, daily candles, you should wait for the daily candle to close. So far, daily candle looks like a shooting star, but it does not mean that we will finish this way, right? If you trade on H4 chart, well, fair enough. This candle is already closed and is definitely bearish. So that opens us a way for a further drop. This is a very interesting situation. Let me show you something, because we got average earnings data here, which helped to create this negative movement. So this movement is data driven. Euro dollar bounced from the long-term uptrend line again. We could adjust this like that. They bounced from the horizontal support, which was in the same time 50% Fibonacci retracement of this uptrend line here, of this upswing. And now the sentiment is positive, even despite the fact of this shooting star here, because the shooting star is not happening on a major resistance. So the sentiment towards euro dollar is positive. Canadian dollar to Japanese yen. Here also you can see signs of a reversal. There is a shooting star here on a daily chart. This upswing is very steep, so the breakout of this trend line should not be, you should not worried about this. The thing is that here we don't have a sell signal yet because the price is above 38.2. Even despite the fact of this drop, at the end of the last week, the sentiment is not negative. We still are above a major horizontal support, which is promoting a further upswing. New Zealand dollar to Canadian dollar, again two strong currencies. Canadian dollar is a bit stronger. The price is creating wedge. This kind of a wedge, especially that we are on a horizontal support, should create a reversal. Breakout of the red line should be a positive sign for the buyers. Euro to British pound. Here we broke the horizontal support on 12th of April. We were thinking that the price will reverse and test this as a support, and the price did not. Here, so more closely, yes. The price did not. Maybe it will. Like this scenario get postponed. We'll see. It would be just nice to test the recent support as a closest resistance. That would be just a normal price action. We're not expecting anything like impossible here. Price, according to price action rules, price loves to test the recent supports as closest resistance. So this is our view on this. It's, as we said, it's nothing supernatural. And this is our most probable scenario at the moment. WTI oil broke horizontal resistance and now is fighting on this resistance to keep it alive as a support. They're struggling a little bit, but it does not mean anything because the sentiment on oil is positive. We do have a buy signal. Well, not from here, but buy signal in overall. If you're late, it's not the best place to open a buy signal, to open a long position, because we may be having the shoulder pattern, left shoulder, head and right shoulder, and we are about to break the neckline and come back below the support. So that's not the environment to open a long position. We said that we have a buy signal which comes from here and is still alive. By the way, that's why I love price action, because there is this, depending from which low will we take, this beautiful flag. Breakout of the upper line of the flag triggers a buy signal. Broken resistance becomes a support. That was just a beautiful price action here. Gold. Gold is in the sideways trend, really. Technically driven down by this false breakout above this horizontal resistance, this one, and dynamic resistance. This is a false breakout, so that is why we do have this reversal here. But driven up by the fundamentals. So there is a concern about this global slowdown, and there are concerns about the war, global war. So when there's uncertainty on the market, the gold is gaining strength. So far from the trading point of view, like from the price action point of view, we do not have any trading signal here whatsoever, which makes me sad because I like trading on gold. American dollar to Canadian dollar. Remember, this week, especially the second part of it, will be important for the Canadian. Because on Wednesday we do have a rate decision, and on Friday we do have CPI and retail sales. From the technical point of view, Canadian dollar is gaining strength for a long time, since the middle of March, since 19th of March. We broke most of the major supports, so long-term uptrend line, horizontal support, 38.2, 50, now we're fighting on 61.8, which got broken. And the price is creating a rectangle. Rectangle is a trend continuation pattern, which actually shows that the demand is very weak. Because if the price went much higher, that would be a wedge or a flag. It would be a normal correction, but rectangles are weak corrections. So this shows that the demand is weak and they do not really have much energy to climb higher. This is why the breakout of the lower line of the formation is more probable. But for that, we need to see, I guess that we should see much better data from the Canada to spark the bullish reaction here. New Zealand dollar to Japanese yen. I told you that there are some good occasions with this pair, with Japanese yen. Much better than Australian dollar, Japanese yen, or Canadian dollar, Japanese yen. It's this one, New Zealand dollar to Japanese yen. What we are having here is a false breakout above the horizontal resistance, and there is a head and shoulder pattern, and there is a breakout of the uptrend line, and there is a breakout of the neckline here. So here actually the strong sell signal was triggered. But if we are still above this horizontal support, I guess that nothing will happen if the trader, if one would wait for the breakout here. Because especially with this candle, this H4 candle here, there is a chance for a bounce and a further upswing. So breakout of those lows would be a significant sign for a denial of the demand. So I would say that waiting here, you're gonna lose like 15 pips, but you will gain extra confirmation, which in my opinion is needed here because the situation looks bearish. But you do not sell above the support. You do not. You sell below the support or below the resistance. You do not sell above the support. Because the support always can be defended and you will lose money. Like here, you do not sell above the support. You wait for the breakout of the support. And the support in this case, it's American dollar to Swiss franc. The support in this case is lower line of this flag or wedge. It doesn't matter. So there is a downtrend and there is a correction. The correction is quite big, quite long, but creates a double bottom formation or even head and shoulder formation. So left shoulder, head and right shoulder. In this case, you have a neckline here. And you have to wait for the breakout here. Alright, so far we do have a right shoulder, but we are above this line and above the neckline, so you do not have a sell signal whatsoever. You will get a strong sell signal once the price will get this lower line of the wedge and the neckline. Now British pound to Japanese yen. This is the pair where you do not see strength of Japanese yen because the British pound is very strong. In the longer term, it was a false breakout below this lower line of the wedge. And false breakouts are one of the strongest technical patterns ever. They are underrated, in my opinion, that they are not so popular because they are not regular patterns. It's not that the false breakout is a regular pattern. It's an event on the market. It's a movement. It's not a pattern. So sometimes it's hard to spot it. but once you're gonna get experience, it will be no problem for you. Swiss franc to Japanese yen. That's what I was telling you, that you should not get there, even despite the fact that the situation was kind of interesting. But you were just betting on two weak currencies. Currently, the sentiment is rather negative, and the breakout of this lower blue line should trigger a sell signal. Australian dollar to American dollar. They eventually broke this horizontal resistance on 0.775. They use that as a support, which makes the situation positive, but there is no buy signal. Buy signal will be triggered once we will break this upper blue line. That's where the buy signal will be triggered. American dollar to Danish crown, still waiting in a sideways trend since the middle of January, so probably we're gonna wait a little bit more. But once either this line or this line will be broken, that will be huge. That can be a very, very strong directional movement. American dollar to Swiss franc, also waiting for the breakout. A breakout of the lower line is more probable according to the trend theory, so the trends are always, there is always a bigger chance for the trend to be continued. Trend is negative, so we should see the breakout of the lower line. Bitcoin yesterday had quite a bad day, but today we try to reverse this. The thing is that we are in a positive territory after this false breakout below the uptrend line, and the breakout of the downtrend line, and breakout of the $7,500 support resistance. We use that as a support, and now the aim is $9,000 for one Bitcoin, and the chances that we'll get there are quite high, are quite significant. DAX is having a very good time. They defended. They are above all major supports. So above the green one, above the blue one, 11,900 points, which is the most important one. Above the neckline of this triple bottom formation, they defended that as a support again. And there was a resistance horizontal one on 12,440 points. And it got broken and it got defended as a support, so there is a buy signal on DAX. There is a FTSE. FTSE is also in a positive territory after this false breakout. Here, as you can see, false breakout. That was a legitimate sell signal, but it was false, it was denied, and it sparked a real buying festival here. About buying festival, I need to show you S&P 500, because S&P 500 bounced from 2,250 points and aimed for the midterm resistance on 2,675 points, and this resistance got broken yesterday. After the breakout, we even tested that as a support, which makes it a legitimate buy signal. So this is a buy. The most probable scenario now is a small comeback, test of this horizontal support as a resistance again, and a further upswing. Upswing aiming this upper black line, which makes it a quite interesting which gives it quite interesting risk to reward ratio. So as you can see, we do have some trading signals this week. Today, for some of them we have to wait, which is not a surprise here in this daily analytical report, because I'm not explaining the future, I'm showing you what can happen and what are the scenarios that you will get ready. So we are not explaining the past, we are trying to explain the future, that you can take advantage of those movements later, and you won't be surprised by anything on the market. That being said, I would like to thank you very much for attending this webinar. Now a short break, half an hour break, and after that we'll have a webinar about basics of the Forex market. Thanks very much and goodbye.